Hello and welcome, and very quickly on to how the Nifty did. We were down around 0.5% thereabouts at the close of trade. The reference price, of course, was was largely in line with where we closed in at, but we saw plenty of jitters towards the fag end, which is the last 20-25 minutes of the session on Tuesday. When you're looking at the movers, Tata Motors, PV, Asian Paints, Infosys, and some of the IT names, Wipro, HCL Tech, or some of the laggards in trade, including a TCS, the breadth was extremely tough. It was 1:4, strained breadth, but no big losers. Essentially, that was the only positive. Axis, Max Health, M&M were just some of your gainers. Max Health also came out with an update and a 3 to 4 year plan, which it spoke about. So saw a decent move on the stock on the back of that. In terms of sectors, and you had some moves across sectors. You saw IT, which was one of the big movers of the day, down nearly 2% at close, 1.5% lower on the realty index, 1% lower on PSU banks. FMCG also down around 0.8%, 0.6% lower on metals, as well as on even on consumption. When you're looking at the top gainer, it was the Nifty India Defence Index. Autos were up 1/3% thereabouts. So that was the tilt. In terms of how broader markets did, we saw the Nifty Small Cap hold on to green for all the day and hold on at close as well. The Nifty Small Cap. The Nifty Mid Cap was down around 0.4% thereabouts. There you go. The Nifty Small Cap held on. The Nifty Mid Cap was down around 0.4%. That was broadly the way in which it panned out. The Nifty 500 index, now the breadth there was 2:3, and that didn't get spoiled at all, despite the pressure, at least on the large cap end, which is the Nifty 50 end. You saw PTC Industries, SBI Cards, Inox Wind, Oberoi Realty, by the way, being some of the big laggards, but Jyoti CNC, that stock was perked up 10% on the back of the ECMS scheme approval, which came through. Electronic manufacturing scheme. You've got Tube Investments, which was up 8%, 7.5% on GSK Pharma, HEG, Aegis Logistics, Zen Tech were just some of your movers. But Sunidhi here with the cues you want to keep on your radar for Wednesday's day of trade.
Here are the key events and developments to watch out for before the upcoming trading session. Talking about the global markets, in the United States, markets will track the FOMC meeting minutes and mortgage application data. The UK will release CPI and house price index data. Meanwhile, Eurozone will report its inflation numbers. On the earnings front, Lohia Corp is all set to report its results. Talking about corporate actions and board results, Aditya Infotech will be in focus as the company is considering a fundraise. In IPOs, Bihari Lal Engineering and Shiprocket are all set to list. Gaja Alternative Asset Management will open for subscription, while Lalita Jewelry Mart and Horizon Industrial Parks IPOs will close. And finally, talking about the other events, Washington is set to impose a fresh 50% tariff on some Canadian goods, making the development important for global trade.
Okay, thank you so much for that, Sunidhi. That's a roundup. Let me go across though. Peter McGuire, CEO, AustraliaTrading.com, joining us this afternoon. Great having you here, Peter. Odd time of the day. We generally don't talk to you at this time, but good having you nonetheless. Peter, conversation largely around crude, right? You're now starting to see $90, $91 on the barrel where Brent is concerned. Would you be worried?
Well, good afternoon, Hirsch. Yes, I am worried because I really thought going back about a week ago, I would have expected now we'd be closer to 81, not 91. And here we are, and it's re-escalation. Iran's now on the offensive. It's a harbinger for what's, I think, going to every chance you could see an increase as far as escalation. How this is going to unpack and what it's going to look like over the next matter of days. The price is now starting to, get a little bit of momentum. And I think it's hit traders pretty hard also. We saw the Nikkei down well, Kosdaq was down, and you got the Nasdaq down around about 1.25%, I think, on the futures. So, it's uneasiness, Hirsch, and that's the situation at the moment.
What are the downside risks from here, Peter? If I were to wear the devil's hat, I would likely make the argument that you've got most countries diluting their reserves and diluting them to levels which we've not seen for a better part of the last 5 years.
Yeah, you bet. I mean, that's a real issue, and there's no hiding that. And that's a concern that's going to be across the fabric of Asia, and how that's going to look like and taste like come, if it was to last for a matter of another month or so. It just seems to be pushed out. Now, where it goes, I know that there's a lot of tankers still getting through and the transponders are off, and to get a real indication as far as how many barrels are leaving the strait each day, what it looks like, of course, to strategic reserves. I think the other wild card could be whether we were to see the hurricane season coming into play. If that was to upset US production, all of these factors can greatly impact market sentiment, Hirsch. And it's difficult to see or try and get in front of, because traders normally look for opportunity, but now it's more the fundamentals that are coming into play from a geopolitical stance.
Peter, if in case you're tracking this closely, how is the flow of crude through the Hormuz at this point in time? Has it completely stalled?
No, I don't believe it's completely stalled. I mean, okay. I'm understanding that the transponders are off of some ships. There is a volume of ships getting through. But it's difficult to, where do you get the news from, in the sense of, deal flow, what it looks like, how many barrels are getting through, Hirsch, and who's on the receiving end of those. I understand from, as far as pipelines, you've got Fujairah being an export hub, all of these factors. But yes, there's no doubt there's great concern as far as, the vessel and tankerage through the strait, and whether the Red Sea is now going to start to escalate again, Bab el-Mandab, and naturally another choke point leading into the Red Sea. So it's on tenterhooks, and as you know, and we've done this for a number of months together, this price, it can certainly ratchet up quickly from where we are.
If I'm reading the data right, Peter, and you can correct me if I'm wrong, we're currently, at least the US Strategic Petroleum Reserve is sub 300 million barrels, which is the lowest, which is a multi-decade low, if I've understood this right. We've not seen these levels at least since the 90s. Am I reading this correctly? And please.
No, I thought it was actually longer than the 90s. I thought it was into the 80s, but it may well be. But that's exactly right from an SPR. And the viewers need to be conscious of this. Strategic petroleum reserves. And naturally, you've got, the likes of the states as far as their production numbers, what they're hitting, and what they are releasing to the market. And naturally, if this was to be protracted, there are great concerns militarily, naturally, of course, from the other side, running your own economy and GDP and all of these factors. So, yes, energy is a large component of our GDP, and no one wants disruptions across any nation.
So since 1982, this is the lowest barrel count since 1982, Peter. At what point does the street start to get really worried? And I'm talking about equity markets plus crude, because even at 90, crude is not looking like as if there's panic on the street.
Well, I mean, a couple of weeks back, you might have been closer now, and we're thinking we could be having this conversation, and it's at $70. Well, it's not that case, Hirsch, and it seems to be on very much an upward tick at the moment. How much more horsepower is behind it over the next couple of days? It's going to be real evident if as far as Iran's situation, from an offensive, their diatribe, their whole emphasis is certainly looking towards some form of escalation. So again, this is a major impact. As you said, the SPR is down at 82 levels. Price, uncertainty, all of these factors are great concerns to naturally traders and to consumers.
Okay, but it's not reflecting on markets, Peter. I know you track equities closely as well. You're not seeing that kind of impact on global equities. In fact, the S&P 500 clocked yet another record high last week, as late as last week.
Yeah. Well, that's exactly right. I mean, let's have a look at the numbers over the last, say, 3 weeks. You had very, very poor non-farm payrolls. You had
Correct.
weak retail sales last Friday. You had inflation didn't surprise. I mean, it met expectation and it did come down a little bit. And the overall theme, plus you look at the other side, as you just mentioned, equity markets at all-time highs. You know, the hyperscalers, the enablers, you look at the volatility. The Nikkei was down today, down around about 2.5. The Kosdaq was down, I think, 3.5. But that's not unusual. They have big swings. They're volatile markets. I'm not calling out that we're going to see a correction or anything in the equity markets because it's very, very bullish at the moment. So these are just the machinations of the market, Hirsch, and one's got to be very mindful that they can turn quickly. And it's just a point in time that you'll see that some sort of movement to the downside, I'm sure of it. But at the moment, it's pretty hard to be short.
Does this, therefore, Peter, this period of uncertainty plus the reducing oil reserves, does this probably hint towards a trade to gold, a tactical trade towards gold at this point in time, $4,400 an ounce?
Yeah, you know, futures are running around about 44.50 sort of number. We've had a big push up in the last, I think it's around about a month. A month ago, Hirsch, we were sitting at about 3,950. We're up about 12.5% in that 1 month, now at 44.50. That's front month futures on COMEX. You know, I think 4,600 is very achievable. I believe we'll be there by the end of the month. The US dollar index, you're running that at around about 99.60. And you've got a 10-year, and it's really nudging up. That 10-year yield on the US 10-year bonds is running at 4.73, and you've got a 2-year running at 4.18. So, you know, there's a lot of big themes playing out in the bond market. Equity markets, as you said, are red hot. And then you've got this escalation issue, and then, you know, the attraction to gold. Yeah, I think there's upside for gold and certainly silver at 65.50.
Okay, understood. Would you prefer gold or silver, Peter? What's the trade?
I think from a big picture perspective over the next year, I'd be probably more bullish silver. But I think in the short term, over the next couple of months, I think gold's going to have a nice rally to the upside. It'll take silver up. But I think silver's got more opportunity to really surge come, 2027. So, yeah, traders will be happy if they're long both of those metals.
If this were to prolong, Peter, for another month or so, you'll likely see those petroleum reserves continue to get depleted, right? At what point do the alarm bells ring, according to you, with regard to how equity markets are viewing this? You know, does it start to ring at 250 million barrels? Is that when equity markets start to panic a little bit, or how do you view that?
Well, I think everyone's strategic reserves would be a major concern. You know, the likes of China, India, Asia. And of course, as you mentioned, the US. I would hope, Hirsch, that we're not here in a month's time continuing to talk about it and the sense where a lot of that heat's come out of the market. But I don't know whether that's going to be the case, because every month that rolls on, it's now up to, month 5, and there's no sign at all of any form of de-escalation. In actual fact, it looks like it's increasing its escalation chances. So yes, the strategic reserves, how that looks. And naturally, that would be, you know, a lot of concern, not only to equity traders, but, you know, if there are supply disruptions across the fabric of the US or other nations, that's really going to cause a lot of concern, which would in turn create a little bit of panic selling, I think, or panic buying for, you know, equities and naturally for commodities.
All right, Peter, thank you so much for coming in and speaking to us. We'll let you go.
Thank you, Hirsch.
Thank you. All right, we'll slip into a very short break. On the other side, we'll have a closer look as to what to expect from our own markets. Akshay Bhagwat will join us from JM Financial Services. He'll give us his perspective on the levels he's looking for on the Nifty for Wednesday's day of trade. Stay with us. Welcome back to our own markets, trying to decode as to what the moves could be for Wednesday. And Akshay Bhagwat, who's joining us at this hour, JM Financial Services. Akshay, great having you. Let me first start off with the levels that you're looking for on the Nifty. Kind of a tepid day for Tuesday, so we're coming on the back of a couple of tepid days. At least in the regular trading session till 3:15, we were very, very range bound, right, on Tuesday. What should the expectation for Wednesday therefore be?
Good afternoon. See, since the beginning of the cash regime, we have seen a slight weakness in the Nifty index. Every day, if you see the day on day, it's been, I think, 10 to 12 trading sessions that Nifty has gradually drifted lower. And we are now nearing an important trend line support zone based on the price charts, which stands at 24050. So probably that is an important support. A lot of put writing at 24,000 for the monthly 25th August expiry. 2 defines that there is a consensus support in the option segment which builds around 24,000. So I think we are almost at near the support juncture from where there can be some good recovery in the closing half of the August month. 24,000, 24,050 are those levels from where you can anticipate a pullback in the Nifty index.
Okay. And Akshay, what's the sector tilt likely to be like, not just for Wednesday, but for maybe the next week or so? What should the bias be?
So, till now, there is not much of a sector rotation, which we see. Initially, there was buying in the small and mid-cap names, which held the markets. But again, those two are slowly losing their shine in the last couple of days. I think defense pack is one area where there is a gradual build-up in buying, which we have seen most of the names in both F&O and cash segment. And that's after the 15th August, the PM's address that some of the defense names have garnered action. Paras Defense is one name you can look forward to. It's closed on circuit today, but we have had a very strong technical breakout of a bullish pattern at 1400 there. So in case the circuit opens tomorrow, 1600, 1650 are the upside levels which we are looking forward to.
Okay. And your picks, Akshay, let's get that out of the way.
So L&T Finance is the first stock we are looking at, 3% up today. Strong base cemented at 305 and momentum returns back very strongly. The technical setup hints for 340 to 345 being the possible upside targets in L&T Finance. Stop loss should be around 312 in this buy trade. And the second surprise can be in Reliance Industries, although it is not for tomorrow, but from short term, I believe the stock is under possible accumulation. It's been 3 months of range bound trading for Reliance Industries, but the way the price parameters are playing out, a breakout at 1340 is most under making, and that breakout should open up upside targets of 1380 to 1420. Maintain a stop loss of 1277 on this buying position.
Okay, Akshay, just quick clarification. You wait till 1340 for playing this trade, or you play it right off the bat because you're currently sitting at 1322?
We buy it at the current market price, anticipating a breakout.
Understood. Okay. Some movers, Akshay, for Tuesdays, or rather on Tuesday's day of trade, and some unlikely ones. One is a GSK Pharma, and that 7.5% move was a bit of a surprise. What next on this one?
So for GSK Power, I think the momentum has been pretty strong in intraday front. It's more of a momentum stock which you can look at, GSK Pharma. And with today's strong closing, clearly we need to see how it opens tomorrow. But in all likelihood, another 2 to 3% looks possible in the making in this stock. So if it does open around 2900, 2910 range, you can consider a buy for possible upsides of 2975 from the momentum perspective.
Two names from defense, Akshay. One is Zentech, the other one is PTC Industries. Both have moved their different ways. Views on both of those very quickly?
So Zen Technologies, if you are asking, 1982 is where it closed. There's a small resistance at 2040, 2050. I think booking out profits around 2050 is what we advise. Fresh buying is not advised at the current elevated rates. And the other stock, if you could please mention again, I just missed out.
PTC Industries, Akshay.
Yeah, PTC Industries, yes, it's a cool down today, but we are retesting the important breakout support zone, which is around 19,500. By around 19,500, 19,000 is a firm support base. The stock should regain its lost momentum, and we are possibly looking at upsides of 21,000 on the short-term scenario.
Okay, Akshay, thank you so much for joining us. We'll let you go, and we're also completely timed out on this edition of Market Edge. Viewers, thank you so much for tuning in. We'll obviously see you during the day of trade of Wednesday.